Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today on show in KYC there is a very important company in this agro space, but I'll let you guess which this company is. It's an agro pesticides manufacturer. Also, looking at the stock itself, it has recently did a stock split and a bonus issue, and the stock is up more than 30% in just last 1 month. The company's name is Best Agrolife, and that has actually caught my attention, and a lot of viewers who look at KYC and they have stated to look into this company and to see whether this company is worth the up move or not. The first question is, will the sales actually do well in Q3 as well, or this impact will continue to happen because already they stated that in the Q2 numbers? That's the first question we'll be asking the management. Are there any recovery expected in the bulk sales? Is the management walking the talk? That mentioned that in the Q2 con call, so that's what we'll ask the management again. And what is the launch pipeline for the patented products? That's where the bullish sentiment is there, which the street is expecting, especially in H2. The fourth question is, what are the debt reduction plans? Already I saw the debt reductions are coming down. It's almost 0.5 debt reduction level. So will this actually come down more? And also any international expansions on the cards? That's what we'll ask the company. Apart from non-LATAM or the non-American regions, which else regions are they finding value going ahead? And that is going to be very much important. But Best Agrolife, let's just ask about more questions about the company, what this company is all about. Of course, it is a pesticide player itself. It is having some patented technologies also. So let's just make you understand what the company does. My company manufactures agrochemicals, but to just give you a perspective, the space has been under tremendous pricing pressure, and also the seasonality of the rain season, especially for domestic players, has been on the negative side. They have roughly 9 patented products. It's just on the start when it comes to the patented products, and they're supposed to have higher levels if they want valuation premium in the market. And the branded institutional sales, that's the breakup coming in. Branded is roughly 69% and the institutional sales, that comes in at 31%. Also, let's pull out, apart from the branded and the institutional, there's the contribution of products, how things happen. And largely in Q2, the number has been on the lower side. If we compare it with the Q2 FY26, that's 38% of sales has happened from the patented segment. And when you have a patented product, of course, you command a higher margin in a business like this. And also, you have a bargaining power. Non-patented products, they are a bit commoditized. And the sector itself, if you look at it currently, is going under a big pricing pressure, and the Q2 numbers have been on the weaker side. Now you must be wondering, the stock is up 30%, why? So we'll try to break it down why it is up. Of course, one of the main and the key reasons would be coming in is the stock split and the bonus issue announcements, and that is where the interest has actually come into the markets. So maybe it's a demand supply situation, because fundamentally also we need to judge the company. That's why we are having 8 of these parameters coming in: income statement, balance sheet, cash flow, return ratios. These are the 4 basic numbers which you should actually look out for. Apart from that, even shareholding, street cred, valuation amongst its peers, that's something which we will do for you. And also the outlook going ahead. Is it mixed? Is it good? Is it bad? We'll get you all the details. Out of these rating parameters, which are 8, we'll give our rating. The first one, that is the income statement, and we'll of course get you the numbers, how it's actually panning out. The 3-year CAGR for the revenue, that's a decent 14%, but my concern starts coming in when it comes to the EBITDA and the margin fronts. Nothing much happening. A company has given a target of 13 to 14%. So the question is, will that actually bounce back, in the H2? That's something which we'll ask the company. Net profit, there are some issues. The Q2, largely the numbers which had come in sequentially, the numbers have done well, but when you judge the company, especially a fertilizer company, you should do year-on-year basis, because there is a seasonality impact to it. And look at these numbers here: revenue down, EBITDA down, margins hit, net profit down, and that's where the concern starts coming in for me. Because of that, I'm just getting the short-term as well as the long-term numbers. I'll be giving this a total setup, a kind of a neutral rating. But there is some hope here, 15% coming in, and they're expecting that to be around that 13 to 14% odd mark. So there seems a hope, and if that has bottomed out, maybe we can see some kind of help in the margin front. But net, my view still remains kind of, neutral for the income statement. Also, let's move to the balance sheet segment, how actually that is panning out. And largely we see the book value that has gone up on the higher side, but the borrowings that has largely come down, and that is why my comfort comes in the debt to equity ratio. But the concern is, of course, they're on the working capital front, because it's a very highly working capital business. And over here, we see that the Q2 numbers were on the weaker side, Q1 also, and largely Q3 is supposed to be a good quarter for these companies. But this time, the company has itself stated that the sales will be impacted. That means these numbers might see some more hit coming in. And because of that, there are two divergences happening. I will give a neutral rating when it comes to the balance sheet. The third one is the cash flow segment. This is also very much important. And remember, a company like this will always have kind of, you could say, a very divergent cash flows coming in, because this is the nature of the business. There is lumpiness, there is seasonality involved. So that is something we'll be looking out for. And no clear trend actually comes out. Of course, the operating cash flow for September, that has done well. That's, you look at that amount, 228 crore rupees. PAT, that has come down, and I mentioned you there has been inventory hits coming in. Now, whether this reversal happens in Q3 or Q4, that's something which time will say. The cash flow to PAT numbers, they are decent to actually get you in. Net cash flows, it's very divergent. But net, I would say the upper numbers have been very strong. At least this seasonality impact which has come in, and because of that, I will give a good thumbs up or for the cash flow segment. But return ratios, that's also my concern. Generally, a 15% when you look at it, it's a very decent number to actually look at for a company like this. And had this been on the higher side, I would have actually given a good thumbs up for it. But see, the reduction has started happening in from 26%, it's 15%, and then these numbers is going down to 13%, and that's where the concerns are happening. And because of that, I will be giving a thumbs down when it comes to the ROC, the return on capital employed numbers. Now let's come and show you the ratings, how things actually move when it comes to the overall shareholding, how it's actually coming in. Largely looking at the shareholding, we see not much change happening. The promoters, it's maintaining that 50% mark. FIs, there is a concern. It was 9%, but then it has come down and it's almost 6% odd. DIs, nothing much change, but institutionally the participation has gone down, and retail participation, which was 41, has gone up to 42%. So because of the institutional participation slowly coming down, I would be giving this a thumbs down, and that's why shareholding pattern, we can see there's a red mark happening. Street cred, that's a very important trigger, and largely the stock came into my interest because it spiked up almost 30% plus in the last 1 month itself. But apart from that, let's look at how other numbers have panned out. Last 6 months, it's 22 odd percent, and then the last 1 year, it's down 37%. That's very concerning. So if you're a shareholder for more than 1 year, that's where the stress starts coming. That's where your patience in holding the stock is getting tested. Last 5 years, let's see what has happened. It's decent, 73 odd percent. That's not a problem. So because of the divergence coming in, 5 year, this has been good. 1 year holding, this has been really big questionable investment. But last 1 month, that's where the interest lies for the market, and it's a very forward-looking setup whenever you come and invest in the market. So I would be giving this a neutral rating when it comes to the street cred or the share movement. But apart from that, let's see the valuations, because the company has two types of peers. One is, of course, the larger peers in the agri-pesticide segment, and ones are the smaller ones who are domestic focused. So I'm going to get all of them to give you the flavor. Where does the valuation stand? And these valuations are 12-month forward P ratios going ahead. Best Agrolife, remember the word, it is 16 times FY27 P. But now let's see how the competitors are faring. And we could just show the UPL and PI industries again, and we see here it's almost 19 to 20 times. It's on the expensive side, but remember, they do command this premium in the market because of the sheer strength and distribution. Let's see the local players, how that has actually come in. And these are the local names, Dhanuka Agritech and Sharda Crop. They are largely similar, when it comes to their valuations. Not much changes happening. And remember, all of the industry valuations are on the lower side. There has been a significant correction. So most of them are showing some kind of strength and maybe a valuation comfort also if you want to play a short-term technical bet on this theme as well. But net, be it comes to the local peers and the valuations from the steep corrections from the highs, I would give this a neutral rating when it comes to the valuations. But now we are done with 7 of the rating parameters. The 8th rating parameter is also very much important. That's the outlook for the company. They're anticipating a lower Q3 sales number. They have mentioned it already. There's a change in the sales strategy and some adjustments as well. They're expecting a 13 to 14% EBITDA margins in H2, and that's a decent one. They have come out with almost 15% in Q2 itself. Patented sales, that's likely to improve from December onwards, and that's very much important. It contributes high margin push and also a strong momentum for other sales profile as well. Exports area growth expansion, that's what we'll be looking at and asking the company which are the geographies and by when these benefits will start coming in. So net we can say that we have given this outlook a kind of a neutral rating going ahead, but let's just give you the entire picture what we have done over the last 8 to 10 minutes and analyze the company itself. And let's just show the 8 parameters which are there. Largely for the income statement, balance sheet, it has been a neutral rating. Cash flow has something which I show some improvement in parameters. Return ratios were disappointing. Shareholding, the institutional participation has gone down. And street trade valuation and outlook, it's there, but is it fully there? That's the question, and that's why I've given a neutral rating when it comes to this space. And overall, for best Agrolife, it's on the lower side in my show, KYC. It's 3.5 out of 8 I have given to this company. The stock has, of course, done really well over the last 1 month or so, but can this move sustain? Or this is just a demand-supply kind of a move because the more shares will be available for the retail as company has announced a bonus as well as share split. So we'll discuss all these questions, and we are now joined by Vikas Jain. He is the CFO at Best Agrolife. A very good afternoon to you, Vikas. Largely the stock has done really well over the last 1 odd month, and there has been an announcement. There's a bonus coming in and a share split also. What's the rationale for this? What is tempting this company to do this right now, especially after a very weak quarter in H1? Why this reward coming to the shareholders?
Yeah, so I think as you had shown that since last 1 year, there was little downward trend in the price of the shares. So we thought it would be a good option to give certain benefits to the shareholders. So that's how we thought of doing the splits and bonus now.
Right, but Vikas, this is just for the shareholders, but fundamentally, let's go back to how you have actually placed the company in Q2. There were concerns on your Q3 sales number, and you had mentioned it in the investor presentation itself. Now we are almost at the end of Q3, and I want to know about this numbers, the sales. Will that be as bad as what it was last time in the con call in Q2, or now has this actually improved?
So this year we are going to improve, and the last 2 years, where in the H2 we were into generally losses. So this year we had tried that we'll not go into losses. We had changed certain policies this year, resulting in a lot of reduction in the sales return. So we wanted to improve our market share. So we had done a lot of sales earlier, and in H2 earlier years we used to take back a lot of sales return. But this year we had changed our policies to ensure that we are not taking huge sales return and to ensure that not getting into losses. So more or less the policies have worked. We have been able to reduce our sales return by more than half, and hopefully we should be. So this is the beginning of the Rabi season. We should be able to see good sales resulting into not huge profit, but at least will ensure that we are not into losses.
All right, but will this impact happen in Q3 or Q4? That's what the street wants, because Q3 is already largely discounted, but you had pointed out is going to be on the weaker side. So will the benefits actually move to Q4 going ahead, or we can see some respite in Q3?
So we'll see respite both in Q3 and Q4. As we mentioned earlier years, there were huge sales return, which this year we have avoided. And also there were other factors, like 2 other factors, wherein we wanted to drastically reduce our inventory levels and to improve our cash flow. That also we have been able, we were successful this year. And the third point, which we had took ourselves to reduce, was the OPEX. If you see our OPEX for 6 months, we had reduced a good 13 to 14% of our OPEX, and the trend will continue in Q3 and Q4. So this should give us benefit and ensure that we are not into losses in Q3 and Q4.
All right, you mentioned, Vikas, about the reduction in OPEX. Now, if that happens, you have given a 13 to 14% EBITDA margin target for H2. Will it remain the same? 15% I think I was in Q2, and you are expecting 13 to 14% in H2. Am I right with this, or would you like to change your margin outlook guidance for H2?
So, prior to September, our initial guidance was that we would be achieving close to 15% EBITDA for full year. It was not for Q2, it was for full year. But due to the excess rainfall which has happened throughout September, continuing in October, and also a lot of flooding had happened in mostly north part of India, we had reduced our numbers to 13 to 14%. So we are hopeful to get 13 to 14% EBITDA for full year by the time we close Q4.
All right, so you're sticking with what you had stated earlier in Q2, and no major change has actually happened over this last 1.5 odd months. But Street is also looking at an important commentary which you had given. So, of course, the management will be joining us in some time. But I just like to point out to our viewers the stock itself, they have given a kind of a good guidance going ahead after taking a big beating in Q2 when it comes to the numbers, and the management is keeping and reiterating their guidance going ahead. Now, why you're seeing an up move in the stock? There are two reasons for it. Shareholders are getting rewarded in terms of bonus and share split, and when this happens, because the number of shares that also goes up and share split also increases. So what happens is larger retail participation also comes in, and right now also the valuations are depressed for the industry and for the company as well. That means we can see some more smart money buying or HNI buying happening in this segment as well. And slowly, I just like to know one more thing is that the bulk sales, that is something which we are looking at where there can be a good up move coming in from the month of December as well. This company also has patented products and non-patented products. Largely from my analysis, the patented products are still on the lesser side. And now that expectation, if you look at it, they can be looking at growth over there. But now we are joined back by the management. Vikas, the bulk sales, I was talking with our audience that from December onwards, that number has to go up, and that you had mentioned it also in the con call. So we are in the end of December, and bulk sales recovery, have they started coming in, or some sales strategy or recognition strategy is actually impacting the December numbers?
So, with respect to patented and bulk sales, our endeavor was we are going into a high level of innovation and to get R&D products. So, since last 3 years, we had launched 9 patented products, which is pretty difficult in this industry. So, these 9 products, along with 3 products what we had introduced, had ensured that our portfolio from these patented products in the branded has gone up from 35 to 50%. So this year we have increased our share of these patented products, and going forward, our endeavor is that we should be hitting or continuing this 50% of our patented products from the total branded products. So this will ensure, or this will result in a lot of reduction in other generic products, but ultimately the profitability gross margins will improve because of this policy. And on the bulk sales and the technical sales, what we had been reducing since last 2 3 years, again this year we have not been pushing too much, but the plan is to improve on these technical and bulk sales as well next year. So next year you will see a good amount of growth coming. This was more like a stabilization year. We wanted to control various things. More or less, we have been successful in doing that. So next year you will see not even the improvement in the bulk tech and bulk sales, but also improvement in margins because the share of the patented products is increasing each year.
Because for the viewers who are hearing for the first time about your company, if you could just help us divide, the patented sales, technical sales, bulk sales, what are these actually there in your industry? It is theoretical, but our audience who are listening for your company for the first time, what you are all about, if you just give us that kind of a breakup.
So just to explain initially about all these sales. So for our industry, there are different kinds of way we sell. One is the technical and the bulk, wherein suppose, for example, we have a technical plant. So we import raw materials, and for various products, we do a lot of backward integration. We produce technical. So this technical can be sold to other competitors who will finally make it into finished goods and sell into the market. So this is the technical part. Then formulate is wherein we produce fully for on behalf of other companies. We white label, in other words, it's called white labeling, wherein we give in their brand. So that is a bulk sales. So this is technical and bulk where we sell to the competitors
Correct.
or other
Vikas,
players.
that's a interesting point you've raised. Your debt reduction and international expansion plans, if you could just give us highlights of both of my queries, debt reduction and international expansions.
So international expansion has been going on pretty fast. We have applied for our products, especially our patented products, in many part of the world, and we had also recently incorporated an entity in Mauritius, which will hold those IP. So we have already started a small portion of exports this year, and the exports will pick up going forward in next 1 or 2 years, and this will become a good part of our revenue model. The other part, debt, we have reduced debt by more than 20-25% in last 3 years. And the present level of debt is more or less sufficient what we see, or we might take little bit of debt from here on. But the existing levels is a good level of debt which would continue for us to continue our branded sales.
All right, but I have an industry-specific questions. You know, Q1, Q2 inventory impact was there. A lot of companies and your peers are also changing strategies, inventory adjustments, sales adjustments. Is the international and the domestic segment, both of them, which you are catering to, has this actually moved on? The industry specifics are bottoming out, or the pain will be there?
So industry has been facing the pain since last 2 years. It had reduced a little bit this year with respect to the prices, but the effect continued because of the unseasonal or rather bad seasonal conditions this year. So it was not more about pricing this year, but it was more about the seasonal conditions. So we feel in this industry, it doesn't happen that we suffer for a long time. So the prices more or less have stabilized, and we don't see the prices affecting next year as well. And hopefully, if the season is a little bit moderate, also the industry will improve from here on. So more, as you're right that mostly the industry has bottomed out in this year, and there will be a lot of improvements next year onwards.
All right, the industry has bottomed out this year. That's coming in from the management, and as per my analysis, also the valuations in this sector are on the lower side. Thank you very much, Vikas, for joining in and giving your views going ahead. And that's all, folks, for KYC. Best Agro Life was in focus. Stay tuned to NDTV Profit.